Flour Mills of Nigeria PLC has released its audited financial results for the year ending March 2021. Revenue increased by 34%, 772 billion naira. Operating profit up by 48%, 52 billion. Profit after tax 126% climbed to 25.7 billion naira. So joining us to discuss the results further is the Group Chief Financial Officer for Flour Mills of Nigeria, Mr. Anders Kristiansson. Good morning to you, sir. Thank you so much for joining us. Lots to get into, so let's get into it. 34% climb in revenue for 2021. What are the drivers behind that?
Good morning, and thank you for asking us to join. In terms of the revenue growth, we had a couple of things that was coming together this year. Over the last 3 or 4 years, we have been investing into Agro, and we saw the Agro investment doing very well. We have always been strong in fertilizer. We saw the animal feed picking up last year, and we saw the edible oil, especially the consumer-based margarine and oil picking up. In addition to that, we launched a couple of new products, basically more affordable pasta, more affordable semovita, what we call value brand, in addition to the premium brand, that they had a good trajectory, and we worked quite a bit on distribution and the reach of the product. So everything coming together of what we have done over the last year drove the revenue. Interesting, we saw all our 4 segments, sugar, food, agro-allied and support growing by 28% plus.
Great stuff. I'm actually looking forward to getting into that, into food, agro-allied, sugar, and the different segments. So thank you for that. But before we get to those segments, costs. Can you talk to us about the increase in costs during the financial year? Let's see, 30% increase in cost of sales, 664 billion. I guess the increase and then your cost management, if you want to talk us through that.
Yeah, of course it was a tough year with the pandemic restrictions, with the inflationary environment, etc., etc. We did see the cost going up. As you can see, the raw and packaging material has gone up in line with the revenue. We went on a cost-saving program where we took out 3 billion of costs, both from the what we call direct costs, i.e. factory repairs and maintenance, and indirect costs to ensure that we remain competitive and affordable. So it was an interesting year when you look at cost increases. We started a program, we took out 3 billion last year. We are looking at further optimize the cost by 4 billion this year, looking at things like gas versus diesel mix, looking at things like where are the optimum production location and how can we have an affordable product.
All right, makes sense. Thank you for that. Still on costs, in particular raw materials, you saw one of those segments there. How's your backward integration program going?
Very well, thank you. Last year, we have projectively increased our sugar estate in Sunti, Niger State. Last year, we had 3,500 hectares under plantation. We saw the local sugar produced increasing by 76%, and we are on track for the backward integration program that we have committed to. We invested quite a bit in local flour manufacturing, together with the Flour Manufacturing Association, together with the different governmental organizations, central bank, etc. We brought in resources that have done backward integration in flour in other locations. Some of the, how shall you say, the cornerstones between the Indian Revolution. We brought in a couple of Ethiopians that have done similar things there to support the local farming community. We worked a lot on finding local seeds, supporting the farmers with the right equipment, funding, etc., etc. We are also working quite a bit on maize backward integration and soya bean, plus that we expanded our agri-farm estate in Edo State.
Fantastic. Thank you so much for that. All right, did want to get into the segments now. Talk to us about the food segment of your business. I see revenue grew about 33%, and food accounts for, I think, about 63% of your group revenue. How'd you do it? Just talk to us about the food segment.
You're spot on. Effectively, we have invested heavily in food for a long time. Our objective is to continue to be the leading B2B company while growing our business to consumer categories. What we did over last year, as per the numbers that are up on the screen, we expanded our capacity in pasta. We launched a second brand, Anti-B, in pasta that has done very well. In Semovita, we have seen a massive upturn in demand. We launched a second brand in Semovita as well. Golden Penny should be the premium brand, at least our humble opinion. And we are also launching a slightly more affordable brand. That, together with driving distribution to ensure that we are more achievable or reachable for the consumer, has helped significantly. We have also gone into adjacent categories. We launched beginning of April, Amazing Day, a breakfast cereal with fully local content, and we are now going into adjacent food categories.
Great stuff. Yeah, I do want to get into that ready-to-eat cereal category. But first, Agro-Allied, how'd you do that? So that revenue there was up 32% revenue growth in the Agro-Allied segment. So, how'd that work out with what you did over the past financial year?
Yeah, no, Agro-Allied has been a long-term investment. The group has for a long term focused on backward integration and local content. We showed how Agro-Allied 3 years ago we had a 12 billion loss in Agro-Allied as we were in an investment phase. The last 2 years we have been break even, and this year we made a profit of 14 billion. What we have seen is we have 4 value chains. We have the fertilizer, which has always done well, and we continue to do well in the fertilizer. We are into animal feed. The poultry animal feed has been growing over the last couple of years. We saw traction on the fish feed as well. And this year we saw a big traction on the edible oil, where we basically sell bulk oil to the industries. We sell margarines, we sell spreads, and we sell consumer pack oils, everything from sachets to 5-liter bottles. That has done very well this year. We are selling the oils through the B2C channels to the consumers that we do for food. And we have found a model that works well with a product that is greatly accepted by the consumer.
Great stuff. Now, sugar has been in the news quite a bit with a number of companies, including yourself. You're along with a couple other companies vying for market share in the sugar space. Those are the numbers right there. So your sugar revenues grew by 27%. Can you talk us through your sugar operations? I think backward integration also counts here as well.
Yeah, backward integration is huge. We continue to sell sugar, same model to the industry and on a growing share to the end consumer. We do have a refinery in Apapa, and we have a growing sugar plantation, as I mentioned, in Sunti. 3,500 hectares is under plantation. We grow the locally produced, today, brown sugar. Eventually, we will look at refining it into white sugar as well. We grew that volume by 69%.
Great stuff. Away from this is still part of your costs. How did you navigate the foreign exchange environment over the past financial year?
It was, of course, an everyday focus area. We have been around. What we saw helping us was, of course, the backward integration we are doing. We are in 5 value chains. In 3 of the value chains, edible oil, animal feed, starch cassava, it's all local content. In the 2 other value chains, there is a decreasing but still high level of import. And as anybody else, we worked with the allocations that were given through the CBN auctions. We managed to meet our needs through the INE window. We have a growing export business as well, which somewhat helped us.
Great stuff. So I think you mentioned this earlier. Were you going into the ready-to-eat cereal market? Well, what potential do you see in that space as far as cereals and food is concerned?
We see a huge potential. Ready-to-eat is roughly 65% of all breakfast consumption in Nigeria. The technology to produce is similar to the other food production we are doing. We are using cornstarch and we are using soya meal, so we are basically using local content. We launched with a 2.5 million metric tons line. That is more or less run out, so we're going to expand capacity a little bit earlier than we had projected, and we can sell it through the distribution channels that we already have established. So we believe we have a great product. That's what we see from consumer testing, and it's growing a bit faster than we had even anticipated.
All right, and I have to ask, with the whole everything that happened with the border closures, the presidency talking about smuggling, the impact on players in the food space like yourself, is smuggling still a challenge for the industry?
We were a bit surprised. We saw a little bit of an uplift when the border closed, where we thought that there would be more of an impact when the border would reopen. So far, we have seen a very limited impact. We have seen more or less nothing on pasta. We have seen very limited on, say, the edible oil and the sugar. We have seen a slightly lower consumption in the animal feed. We take that more as a reflection of the affordability and lower chicken consumption. So, of course, if everybody are on an even playing field, we prefer it as we pay everything we should, but we haven't seen much of an impact after the opening so far.
All right, that's encouraging. Okay, still have a little more time here, but I do want to ask about your financial year ended in March. How do you see the rest of 2021 playing out?
On the long run, we are very, very comfortable in the model that we are having, and we are very comfortable that we will see the growth. As we saw last year, there are ups and downs. We have seen a bit of an impact of the gridlock in Apapa. We have seen, shall we say, slightly bumpy month or two, but if we project this over, say, 6 to 9 months, we are very comfortable.
All right, Anders Kristiansson, the CFO, Group CFO of Flour Mills of Nigeria PLC. Thank you so much for taking us through your financials. Really appreciate your time. Have you back again to discuss more in the industry. Thank you so much.